Hello, this is Nate Williams from Practice Financial Group, and today we are talking about legal and smart tax deductions, introducing charitable contributions. Charitable contributions are great. The government subsidizes, at least currently, giving money to charitable organizations. Now, one of the promises that I want to make to our clients is that you will never get pushback from us for being generous and giving your money away. I think it's a great thing to do with your money. So, a little more about charitable contributions. Cash or property given to qualified organizations are tax deductible. By qualified, I mean what are called 501c3 organizations. This is a tax status that the receiving or charitable organization needs to file and establish with the IRS. Here's something of note. Whether you pay for this expense or make this contribution personally or through the practice, the tax treatment is identical, okay? Keep note of that. Identical treatment, whether you pay personally or through the practice. So, because you need to contribute to a charitable organization, a 501c3 entity, contributions to GoFundMe campaigns or to a needy family that you know personally, however worthy those causes are, they are not tax deductible. Now, I'm not telling you to not make contributions to those things. Just know that if you contribute to a GoFundMe campaign, it is not a tax deductible contribution. Here's another thing that's tax deductible that a lot of you don't know: charitable miles. So if you serve or volunteer for a charitable organization, a 501c3 organization, you can take a tax deduction to money you give to that organization or for miles you drive on behalf of that organization. So if you, for example, run the nursery at your church, and that's a volunteer position that you do, if you drive to and from the church or that nursery, those miles are tax deductible. Another thing that's tax deductible is clothing or household goods that are in good condition. Up to $500 can be deducted from your tax return without needing an appraisal or without needing an extra IRS tax form. So $500 is kind of that maximum sweet spot that you want to give without creating more complexity and more scrutiny around the gift. Now, I want to talk about gifting appreciated property like stocks. If you contribute appreciated property, you can get a double tax deduction. This is great. For example, let's say you buy stock for $10,000 even. And then let's assume that the stock appreciates to $15,000. If you liquidate or sell the stock, you have a $5,000 taxable gain, which is the $15,000 value minus the cost basis, or in other words, what you paid for the stock. But if you contribute the stock to charity, you get to double dip. Let me move this little thing out of the way. You get the $15,000 charitable contribution for the $15,000 fair market value of the gift, and you get to avoid the $5,000 of taxable gain. So if you're thinking of giving money to a charitable organization and you have appreciated stock or mutual funds or ETFs, think hard about making the contribution with this appreciated property rather than contributing in cash.